All right, welcome to the weekend video. This is Enda here, bullwaves.org, and let's get into the markets. If you like what I do, check out bullwaves.org and become a member. Okay, for nightly Elliott wave analysis. Okay, let's get into the FX market. I'm going to start with Eurodollar. This is the 4-hour count, and overall, I've been tracking this long, drawn-out triangle. As you see, the contracting range of the action, continues week by week by week by week. All we're doing here is we're serving to drag out this correction, again, week by week. I think, if this particular count is correct, we're probably going to do this for the next. We're probably going to do this for the next 2 months, I'd say. You could probably equally split that between wave D and wave E if you want to. But as the range contracts, the internal waves itself, the time that you spend on each wave will get shorter. The longest one so far has been wave B, I think. Quite well. Let's see. Time frames. No. Sorry. 9 cycles. Yeah, wave B, slightly longer, by about 15%, 20%. Wave A, over wave A, I mean. Wave C, I wonder. Wave C so far has been about, well, we'll say 78%. Yeah, it's been about 62%. That's what I'd say on a fib. It's probably about 62. It's matching that initial move up in wave A. Sorry for the kind of delay on that there. It's just interesting. I kind of stumped myself there for a second. Right. Overall, the triangle contracting range is going quite well. The internal action is still quite corrective. I expect this will continue for the next 2 months, probably into the end of July, somewhere where wave B will close out below this wave C. So yeah, we're probably looking at about 108.50 to complete wave B. So it's going to be a quiet summer. If this count is correct, Eurodollar is going to be a quiet summer. Let's go to the hourly count. We'll check out wave C here. I've actually labeled this now as a triple combination. So we've got this 3 up, 3 down, 3 up, triple 3, rally in wave C. For the moment, we are so close to the end of the C wave. Every opportunity to call a top on it is too is too enticing. But the action so far this week has been flat to down, so there is evidence to suggest that wave C is complete, but we'll see. We will see over the next week or so. We should move down into wave D, and then again, that should probably take a couple of weeks at least, maybe even up to a month to complete. So there won't be a whole lot to report here. I think we may end up at the same price again in 6 weeks' time in wave B. So we seem to be going to sleep here in Eurodollar. For the next week, I think we will turn down into wave D. Okay, let's go to pound dollar. I don't think it's the same in cable. I think we are about to see a resurgence of an impulsive downside move in cable. It's been long awaited. Wave 2 has drifted up dangerously close, I suppose, to that previous wave 2 top. We shall see soon enough. We're quite close. We seem to have at least stalled upside momentum in the last couple of weeks. Granted, nothing has happened to the downside to suggest that wave 1 here is underway. But again, I suppose it's much like euro dollar. I'm going to take the stance that we have topped out until proven otherwise, because the pattern to the upside is more or less complete. It's about as complete as you can get, and we should see impulsive move lower sooner rather than later, I think. Okay, dollar yen, 4-hour count. I was looking at a possible alternate during the week here for wave 2 in blue. At the moment, I have wave 2 over here. So, wave 1 and 2 to begin wave 5 up. It's still a reasonable possibility, but depending on the action, well, the action earlier on this week was hinting towards an expanded flat correction wave 2. We are not, I'm glad to say, not favoring that right now. We seem to have moved back towards the impulsive upside kind of pattern again, and I'll show you that in the short term chart, the hourly chart. But it seems right now that the balance of probability lies with wave 3 up. So this is wave 1 and 2 of 3. So I'll show you that in the hourly count. You can see wave 1 up, 5 waves. So we've got a wave 1, 2, 3, 4, and 5. Wave 2 down, an extended C wave down. So that kind of caught me off guard this week, that's for sure. I was looking at this 3-wave pattern lower, and I did actually think that wave C of 2 was complete up here. We extended lower then on, I think, Wednesday, but we bounced right out of that on Thursday. So at this moment in time, at this juncture, it looks like we have a possible impulse move higher into wave 3. That'll be wave 3 of 3. So if this count is correct, then we are going to get a serious rally next week. The action today and overnight in dollar yen has been corrective. So again, we've built a higher low. So we can see a higher low built in wave 2, in 1 and 2, suggesting wave 3 is underway. So, if we get a rally back above 157, then I think we're probably going to go all the way up to 160 easily, and maybe even higher. Wave 1 equaling wave 3 would put us up towards 160. But if if wave 3 reaches 162% of wave 1, then we're up at about 161.20. So we're on the verge here, I think. It should be, if correct, it should be a pretty solid move up in euro dollar, in dollar yen next week. Okay, let's get to the stock market. The Dow continues kind of fake out and then impulsively move down. So, you make of that what you will, but that very slight new all-time high did not last long. An afternoon maybe, and then we came down quite hard last week, and now we seem to be correcting to the upside this week. So, in terms of the 4-hour count, we see again a crossover to the downside of moving averages, and at the moment we have the upside correction failing at that 200 MA again. So for the daily, we'll see what kind of we see the extended nature. If we get, let's see that vertical line here, you can see the extended nature of the moving average divergence here between the 50 and the 200. Well, I think that was about as extreme as we've seen over the, at least over the last year. Extreme to the upside, that is. So, after that that recent top, it's been a series of tops, I suppose. So it's kind of a rolling top, really. We seem to be contracting again. So we've got this again a hint that momentum has died. We do still have that 3-wave pattern solidly in place. We have, again, enough of a downside move to suggest that we are building something bigger here. And in terms of, let's say, if you were to put this move in comparison with previous market action, let's say since throughout all of 2023, really, we have a comparative move that compares well with the previous decline early in 2023. So again, it's sputtering. You can write all the headlines you want about Nvidia. You can write all the headlines you want about new highs, but it's a very, very, very narrow market, and it seems to be concentrated in tech. The S&P is because it includes some of those names. It is let's say falsifying a buoyancy there, but I think that the divergence in outcomes between the Dow and the S&P should be telling us something here. And again, well, to me, it's telling me that there's less air in this balloon than you think there is. So we go to the hourly count here. You can see we have a 5-wave count down, a possible 3-wave count up, and again yesterday a bit of a rejection around the 50% retracement level. So we have here's the 50 the fib retracement at about 39,000, and we have a rejection of that level so far. I don't know whether we're going to continue lower today. It would seem it's plausible. We'll see what happens. It's a kind of a reasonably heavy news day, so we'll see how the knee-jerk reactions go on this. Maybe they'll go in favor of the bearish count. If that's the case, then the level I'm looking at is 38,240. That would be the previous wave B of this 3-wave rally. If we chop below that again, then that will signal that wave 3 is possibly getting underway here. So that'll be something to look out for next week, I think. Okay, so gold. I was turning my attention to a possible triangle in gold last night. Again, it's still a possibility, but we have action this morning that kind of favors the main wave count. If this triangle is correct, this would be the alternate count at the moment. Then this spike lower may be part of wave E of wave 4, and if the triangle is correct, then we are completing wave 4, and we are turning higher into wave 5 next week. But this is a big but. 2313. Watch for a break below that level. If we break below that level, that will pretty much confirm the main count here, and that'll be wave 3 of C coming our way. And if that happens, then we are probably looking back towards about 2200 again to complete wave C of wave 4. So that is the idea here. Wave 1 and 2 has held today. We've got a vote in favor of that today. So, 5-wave pattern lower in wave 3 is not out of the bounds of possibility at all today. Let's see if that goes. Let's move on to crude oil. Here's the 4-hour count on crude oil. This is an alternate that I was suggesting last night also. The power of, well, not necessarily the power, but the extent of the rally off the recent lows has retraced far enough into the decline to suggest that we have something a little different going on. So I was suggesting that this is wave 3 underway. That'll be wave 3 in green. This one here. That may not be the case now because we can count 5 waves down into this week's low. So we could be looking at 3 waves up into wave 2 over the next week. If that's the case, then we're probably looking back towards this this kind of shelf of resistance here. So we've got about $80 again. 3 waves up into about $80 seems about reasonable to suggest a completed wave 2. Let's see where that comes on our Fibonacci grid. So just above the 50% retracement level, right in the ballpark of where you would expect a second wave to complete. Now, the hourly count has not been changed, so waiting for confirmation on this one here. I would hold both of these in my hand as equals at the moment. There is another possibility here, which I will show you. Now, here's the, let's say, we'll call it the third alternate here, that we have a lower degree wave 1 and 2 to begin wave 3 now underway. So you cannot disregard, I suppose, this third wave down scenario just yet. I suppose I'm sitting on the fence here, but it's my prerogative to do that right now. Impulsive decline could be wave 1. Let's see if we get a corrective retracement in wave 2 around and about that 76 level. So that'll be the lower end of this kind of resistance shelf here. That's this consolidation that happened previously early on in May. If the lower end of that consolidation acts as resistance, then I would prefer this wave count here, which suggests that wave 3 is already underway. But if we drift up towards that higher end of the corrective range, that would suggest that wave 1 and 2 is still underway. So you can see how that the possibility remains here. Maybe I'm standing on the fence here, but longer term, I think more declines are coming our way in a third wave. It's just this kind of 1-2 pattern here that needs to be resolved. Maybe we'll even do that today. Who knows? Okay. Now we move on to the S&P. We have a new high this week. Again, this massive tech rally has dragged the S&P up with it. I'm reasonably comfortable with this anyway, because we have a 3-wave correction that we were tracking last week that resolved with an impulsive rally. So the 3-wave correction, as you see on the hourly count here, that was tracked as wave 4, and we were looking for a rally in wave 5. So we're coming to a conclusion, I suppose, of this 5-wave pattern up in wave 5 blue. It's not going to happen today, I wouldn't say. But then again, next week, I think we will remarry between the Dow, the wave count of the Dow, and the count in the S&P. I think both will probably coincide with a turn down again. So we'll see how that goes. Okay, let's move on. Silver. There's a 4-hour count in silver. We had 3 waves down in wave A. The rally in wave B, that didn't quite go as far as I suspected it might. I thought we'd get right down to $29 flat, but we were close enough, I suppose. But 3 waves down in wave A. Looking for a wave B rally, I suppose, to come soon enough. It came quicker than I expected. But next week, I think we should see a further decline in wave C. So that completes overall 3 waves down in wave 2. You can see the hourly count here. We've got ABC down in wave A. Possibility that it's ABC up in wave B already done. I don't know about that yet. I suppose if it's a possibility, we should look at it. The action this morning is reasonably impulsive, so it does suggest, it leans in favor anyway of a wave 1 of wave 1 of C. So that should be a 5-wave decline in wave C. We're leaning in favor of that right now. So if we continue that way today, then we might be onto something next week for a sustained decline in wave C. And again, if we do get a sustained decline in wave C, I'm looking back towards that previous 4th wave low. Again, that'd be $25.90 or $26. That might be a very good area to start looking for a longer term buying position, I suppose. Let's take a look at the NASDAQ. just for pig iron. Again, wave 5 count here in the Nasdaq. Nasdaq's daily. Oh, gosh, that wave 5 has gone further than I expected. We did fill the trend channel up here back in March last year. We drifted off, and then we came back again this year. It looks like we've got 5 waves up, pretty much complete in wave 5. You can see that recent rally off the April lows. We've got wave 1 and 2, and then a wave 1 and 2, extended wave 3, 4, and 5. That's wave 3 done. And then ABC down in wave 4. And it looks like we're working on 5 waves up in wave 5. So the internal pattern, probably not complete on this one just yet. So once we get 5 waves up here, that will complete wave 5 green. And that will do it for the Nasdaq. So, sayonara. Good luck. It was nice knowing you. And then, I don't think there's any market, any stock market that will weather what's coming towards it. The storm that's coming towards it will wipe it out. So they all converge to the downside eventually anyway. So forgive my blasé remarks on that. Okay, if you like what I do, check out bullwhiz.org, and I will be updating there tonight, as I do every night. I usually end every presentation of the markets with a presentation of the good news, and that is the good news of the Messiah. We are all, let's say, born in a failed state. The planet Earth is a failed state, politically and biologically and spiritually. It's a failed state. The Messiah came. Let's go back on that. It's a failed state because humanity fell, and we lost the Spirit of God. We lost the connection to God. We lost fellowship with God. Messiah came to reconstitute the connection to God, that fellowship with God, by paying and completing the sin problem, to dealing with the sin problem. So the sin problem is dealt with in Messiah. What do you need to do to appropriate that to yourself? Well, we have free will. We can all reject it if we want. I choose to accept it, that the finished work of the Messiah has paid for my sins, and I will place my trust in what he did, not in what I'm doing. So that is let's say, the transaction that you make. It's a good deal, though, because your temporal self will be translated to the eternal self, to the eternal state, glorified state, because your sins are paid for, and God can now fellowship with you again. So I think it's a good deal. Romans 10, John chapter 1 and verse 12, Romans chapter 3 verse 23, all say the same thing. And if you just read the Gospel of John, it says it over and over and over and over and over again. Believe in the Messiah, and you will be saved. So that's what I would, suggest that you would do. Take your eyes off the temporal and look towards the eternal, because therein lies the real prize. All right, that's it. Until tonight, we'll see you then. God bless. Godspeed.